Hey, everybody, now here's the thing. 3 weeks in a row, mortgage rates have been coming down, kind of predicted based on last week's metrics and the week before. We're starting to see some really good inflationary numbers. Well, hopefully they're heading in a downward trend because energy costs are up 20% year over year. Some food costs, other things like that, up over 30%. And that affects our pocketbook. So let's talk a little bit about the market. Let's talk about what's going on. Okay, so as we talk about the market, everything is done by consistent metrics every single week. No, there is no screen. No, I do not read from a teleprompter. That is probably obvious as I go through this each and every week because I do enjoy it. The goal is to get you really good information. So when we pop up here, we take a look at this. It says June is shaping up nicely. Bigger test yet to come. That means we have some more information that is going to be coming up on typically Wednesdays. But here's the thing. Freddie Mac, one of the metrics that we quote, lower mortgage rates coupled with the gradually improving housing market bodes well for the housing, the improved housing supply bodes well for the housing market. So aspiring homeowners, hey, you know what? That is without a doubt, homeowners or home buyers, I should say, are coming out and absolutely presenting themselves with really great offers. We're seeing multiple offers, even though there's a gal who I actually asked, she put us as Seattle as one of the top 10 neighborhood communities, as far as by year end to see a price reduction on homes. And I emailed her asking, where did she get her metrics? How did she arrive at that? And I didn't get an answer at all. But I am hopeful because I'm super curious. You see, here's the thing. Let's pop this. Let's just jump ahead, right? Here's the thing. I'm going to bypass a couple of things. Look at this. Now, when we take a look at what's coming on market, we have 1,390 homes that came on market. We had 1,390 homes that went off market. Now, granted, there were 760 homes that had a price reduction. But here's the funny thing. If our market is struggling and we're going to be seeing a decrease, that means that we need a much larger volume of homes coming on the market, okay? So if I come back and I take a look at this and we back up, you can see that we're up 7.4% just on our median price. And you can see the far left there, that's 2021, then 2022, 2023, and then, of course, 2024. And you can see how we've been bobbling along and how we are improving as we are continuing our market. Super interesting because in order for us to take a step back, a few things need to happen. One, we need to see a massive amount of layoffs on the employment side. In other words, we need to have greater unemployment. Number two, interest rates, boom, they need to go up above 7.5, closer to the 8s for buyers, again, start pulling back because par pricing between the high 6s and low 7s is very common. And so we're going to need to see that interest rate go up. Plus, we're actually going to need to see a significant increase in inventory. We're only at 2 months of inventory, 2.2 months of inventory right now based on residential homes available. We don't do the condos, multifamily, vacant land. That's a different report. If you want those, let me know. Single family only. And we only have about 2 months of inventory, which is showing us that we're pretty balanced right now. It's not weighted heavily to the sellers. It's not weighted heavily to the buyers. But what is super important is that price is the first impression of any home. Because if we open this back up again and we take a look at, let's blow this up. So when we take a look at the canceled or we take a look at the price reduced, and you can see that those are sellers that missed the market. And that's really the most key thing that people need to understand, because the longer you're on market, the lower your prices statistically. And we've been through that in other ones. We won't go through it today. If you want information on that, just let me know. We'll send it off to you. It's no big deal. No strings attached. Just leave me a note down below. Now, when we open this back up, Remember, super accurate information. You only get it here. Let's talk about average homes for sale price versus average homes sold price. Super cool. We have actually seen an increase year over year of about $1,000. Yeah, that's pretty good. That's our, that's our average for sale. That's actually pretty good. And then when we take a look at the average sold, even month to date, we're up about $2,000. Not any great shakes. Again, that is showing us in a lot of regards what is happening with our market. We are still seeing that little incremental increase in pricing, even though we're seeing an incremental increase in inventory, which is super helpful because we are starving for inventory. Buyers are looking for that. Now, on the flip side, builders and new construction, because they went from being, 30% of the inventory market inventory out there down to where they normally are at about 10, 11%. They're not, their sales are struggling a little bit because, again, we are seeing more homes coming on market. And you might say, well, George, why would builders be feeling that pain? Well, builders get on average 10% premium over a similar priced resale. And so when you take a look at that with higher interest rates and there are more resale or used homes, existing homes that are available on the market, they tend to lean that way. 78% of buyers right now want a home that is turnkey, and many sellers are doing this so that they can get the most amount of buyers in their home and competing on multiple offers. There's a number of different ways to do that without bankrupting your checkbook. Anyway, moving on. All right, so when we take a look and we pop back here, let's take a look at the Northwest MLS. Now, again, single family only. When we take a look at these numbers, year to date, everything is positive. Look at that. We have more homes that are currently available for sale. We have more homes that have come new on market. Also, we're seeing more sold and more pended homes year to date. Even when we take a look at the month to date, those numbers are looking absolutely fabulous. And the reason that is super important is that, again, we're seeing more homes coming on. Some of the golden handcuffs are coming off. Those are the folks that have mortgage rates in the 3s and low 4%. They're coming on market because, again, things change. And we're starting to see, again, more velocity. Even though we're in our vacation trifecta and we will be in a slightly slower market until after July 4th, in which many folks are saying we are feeling it. But again, well-priced homes are still seeing multiple offers. If you're not getting the gist, price is your first impression. The homes and your videos and all your landing pages marketing that, not just putting it in the MLS, is what a buyer looks at. Price is first, everything else is secondary. We all do it. They're no different. All right, we move back here. Let's take a look at new construction. Now, I just said with new construction, we were taking a little bit of a beating. Yes, still seeing the same types of ads, but let's take a look at the annual and year to date for the month as far as average sale and for average solds. Now, the last couple of weeks, we've actually seen some of those numbers popping down, meaning that we have seen some of the sales prices on new construction, coming down. Well, they've made a little bit of a recovery. And the main reason is that we did a massive drawdown on inventory. Builders started offering a few different incentives, and then they came back and provided a little bit more, well, let's just call it incentive. And so we see some of our numbers, and in fact, our average sold price, even though year to date stayed the same as last week, we're up $10,000 just for the month of June for week over week. And that's an important message because, again, everybody's vying for the same number of buyers, and it works out to dollars and cents. And what's going to really, make the budget for each and every family that's out there looking for a home. Just saying. All right. So if we take a look, and let's pop back here. We take a look at our new construction as far as actual homes for sale, okay, and actual pended. So funny enough, again, like we said, for the third week in a row, as interest rates have come down, more inventories come up, new construction's been lagging just a little bit. For the month of June, when we take a look at it, just, year over year, you can see, look, we're down 52 homes and only one pended home. Not, those aren't just absolutely crazy numbers by any stretch. And in fact, still very modest. Are we going to expect a huge burst as we get to month end? Yes, that is always the best time to look at new construction because plats need to get homes under contract, to, balance those numbers. Anyway, so keep that in mind. And if you have questions, again, ping them below. If you're looking for new plats, there's 3 new plats that are coming out that are not published. They're not available except for folks that deal with new construction all the time. There are 3. If you want them, let us know. We'll fire those off to you. Most of them, there's 2 of them on the east side and 1 is South King. Anyway, there you go. All right, moving on. Let's pull this back up again. Let's head over to the bank owned. And I have to apologize. I have to apologize for our industry because this week we have even more agents to add to the wall of shame on not publishing and not paying attention to their listings and whatnot. And a homeowner is now being marketed as a bank owned, which is super sad because that does affect what they are doing. Anyway, so let's get into those numbers. What you guys will find out, which is super interesting, is that if we blow these numbers up for you to see, we actually only have 44 homes that are currently available. 12 of them are not foreclosures. And so our numbers actually are not up by 9.8%. They're actually down roughly about 13%. And, our inventory for year to date for bank-owned homes, those are also down. And listen, as you're taking a look at, is a foreclosure a good option for me? Look, there's not enough. I can tell you that right now. Bank-owned homes, paint, carpet, and vinyl, they put them on, they'll get market value for it. There's a couple of them out there that are bank-owned. I don't know what they're thinking. They're just overpriced, but they'll figure it out. Maybe they were just having high hopes. Or the sad part is maybe they had an agent that told them and they did what we call buying a listing. Not them buying the listing. They just overprice it to incentivize a seller to work with them. And then they get beat down to reduce the price, giving all kinds of excuses. Nonetheless, super sad. As a seller, please don't get caught into looking at, oh my gosh, this agent said they can get us $50,000 more than everybody else. It's a bunch of hooey. Look, there was a book that was written. It's called Beware of the Naked Man Who Offers You His Shirt. It's a very good book. It's a case in point. Listen, don't get caught up in somebody who promises you something just because it makes you feel good. That's a really bad idea, and it shows, and it happens, unfortunately, all the time with lesser agents. Anyway, be careful of that. With that, if you have any questions, let us know. We do answer all questions typically within 30 minutes, except for on Sunday. It's going to be a beautiful, Sunday today. The sun is coming out, and I will see you on the next video. Make sure to smash that subscribe button, share it with 2 people that you like and 1 person you don't like, and hopefully you enjoy this. Let us know. Have a great weekend. Take care.